Hello and welcome to the market update for Tuesday, March the 8th. As always, if you have any questions during the week or any that I don't get to in class, make sure you send those to jerry@traderspro.com. Let's go ahead and get into the class today. Today's been a little bit of a volatile day, back and forth. Yeah, to be honest with you, when the market rallied back up, it really kind of confused me. I didn't see why. I didn't understand why. I'm going to kind of explain that as we look at the charts. Now that we've kind of sold back off a little bit, it makes a lot more sense, and I think a little bit more likely that we head lower. But like I said, I'll point that out on the charts. At least we'll also point out the key areas that we need to focus on, because again, I can flip-flop that point of view as well. But I just from the way things closed yesterday, didn't make a lot of sense that we would rally strongly from here anyway. So as far as the direction alerts, we are a little bit oversold, but not really extreme. Now that could change. Remember, these update overnight. If we do sell off into the close, I think that would push momentum into the extreme zone right there, and that would definitely be the start of becoming really oversold. But we're not quite there yet. And Brett has a little bit of ways to go to get to that extreme range there. Sentiment is still high, which again, it's been in that high extreme range forever, it seems. Even with all the selling that we've had off the highs, as far as we've dropped off the highs, we have not seen sentiment collapse. Now, that is something to pay attention to, because as I keep pointing out, and one of the things I keep talking about with some of these sell-offs is that we really haven't gotten to a level of panic selling that you'd like to see to put in a market bottom to really have a lot of confidence that we're going to rally out of this. Now, one thing I do want to point out as it relates to bottoms, I try to talk sometimes about psychological factors, tops and bottoms. We've done a lot over the years. But one thing to keep in mind, especially if you're trying to line up world events with market events, what is usually the case is that the market will bottom before the economy bottoms. In other words, if we are going to go into a recession, that the worst parts of that recession will be felt even as the market is already starting to rally back up, or the market will bottom first before the economy will bottom. So, and so that's also a way that we can kind of judge how severe a slowdown or recession. I'm not saying we're in a recession, but we're heading that way with the way things are going, particularly with what's happening today. And again, I'll talk about that when we look at some of the other charts as well. But just keep that in mind, because when you start to have that kind of extreme sell-off, and then reverse, and then you could start to see it trend upward, even as news events and economic numbers could look worse and worse and worse for even months. That you could see the market bottom before the economy will. So, and the opposite is true too. Very often the market will start selling off before, and that's been the case. The market started the sell-off off the highs before we started to get the really bad inflation numbers, and the economy is starting to slow down, or have to start to slow down. We already started to drop ahead of that. So the market is always leading events. It's always forward looking. Now, again, you're not going to base your trades off of that alone. You never base your trades off of sentiment. But understanding that can help you, because as you're looking at a chart sometimes and you're saying, boy, the market looks like it's in an uptrend. It doesn't look like it's stopping, but I keep hearing news of this bad news and this bad news, and so what it does is it causes you not to trust the trend, and that's something I have to be careful of too, because I feel like we still have a little bit lower to go to kind of put in a bottom. But if we were to have reversed today and started trending up and moving back above these levels I'm going to point out here in just a second, then I'd have to assume that I have to trust the trend. Whatever the trend is showing me, I'm going to follow what the trend is doing. But again, those of you that's the difficult part about trend trading is kind of eliminating the noise sometimes, everything else that's going on, all the chatter, all the opinions, and trying to focus on what is actually taking place, what's actually going on. That's always the tough part. So let's go in and let's go over to the watch list here. And you can see the wild roller coaster today. We opened pretty much right where we closed yesterday after that big down day yesterday. We started to sell off, and then we came roaring back, came all the way up to here, and then now we're all the way back down. Now, so far the candle is just showing complete indecision. That's a wildly indecision type day. Buyers and sellers back and forth, probably both buyers and sellers a little bit confused at this point. But again, that could change. This candle will probably look different at the close, or could look different at the close. Maybe it does rally back up to the highs and closes up there. Maybe it closes at the lows, or maybe it closes right in the middle there. We'll see. But I do want to point out the significance of a couple things. First of all, one area that I've really been focused on is this January 24th low. We had this big reversal, had this big drop right here, sharp drop, a gap down, went way all the way down here, came roaring all the way back, closed higher, and we got this little rally off of it. Now, that didn't last very long. In fact, the two reversal days I've been looking at is that January 24th reversal and the January 10th reversal right here. This is the one back here that I think we need to get above in order to really be confident that the correction is over and that we're going to be moving up. Not that we can't get into trades beforehand, but that will really be the area where if we get above that and close above that, that we'll be very confident that the downside risk will really be diminished at that point, and we'll be a lot more confident in the buying that we're doing at that point. But what happened here, we've got so what happened yesterday back here, we closed. This was that Wednesday. That Wednesday a couple weeks ago, we closed right at the lows, right at that January 24th low. And typically, you don't have a big down day like that and close right at the support level and then reverse right back up. Usually when you close right at the support level, right at the lows of the day, you're going to break below there. So again, I'm going back to stuff I've already talked about, but provide some context, particularly for those that are jumping on here brand new. Very high probability we were going to go lower, and a good probability we were going to gap lower. Well, we gapped down, had this big bullish reversal. Now this day is going to be significant as well. Big bullish reversal candle. And I talked about this in the last update. If we were to sell off into that day, that it would likely trigger, or could likely trigger, more selling. Now there's also a possibility, and that there's another possibility that it could trigger more buying. The people that were confident buyers here, maybe they're, especially that were confident buyers down here, maybe they're the ones that are jumping in right now and pushing things higher because they're convinced this is the area to buy. Remember, our job right now is we're trying to read what the professional traders are doing. They're the ones that move the market, and whether they're right or wrong is really irrelevant, because they're the ones that are going to move the market up or they're going to move it down. And all we want to do is just try to understand what they're doing and try to follow along, whether that's actively trading and buying in this case, if they're buying, or if they're selling, maybe it means we just sit on the sidelines. We don't do anything until they're done selling and push everything down. But another support area, so that we're going to be focusing on that. We're going to be focusing on this low right here, and we're going to be focusing on this. Now this goes back a little ways. Let me make sure we look at this in a little bit of context here. So these lows right here, you can draw a line all the way out, and you've got support there, support there, support there, and support in here. And why is that significant? Why is this area significant? Well, look where we rallied up today. Where was the high of today? It was right at that 427 support area. Okay, so that is something we got to pay attention to as well. That is significant that we rallied up to it and then we're selling off of it. Again, I know there's a lot of you are saying, well, why did it do that? We don't need to know why. To be honest, I mean, you could come up with theories. There's a lot of news out today, and you could have your reason why it failed right there, but it doesn't matter. The chart is showing you that it failed. That's all you really need to know, because it failed at a significant spot. Okay. In other words, over here where people were buying on these lows and buying at that was a support area right here that we bounced off of. Here we rallied up to it. Now it's coming back down. Now it's a resistance area. Okay. Now there's selling pressure right here. Here there was buying pressure. But yesterday, again, what was concerning yesterday is look what happened yesterday. We didn't close at that low. I think that would have been, well, I would have felt probably the same way had we closed right at that low, that we could have a repeat of that Thursday where we gapped down, maybe not as far, but we gapped down and maybe have a little bit of a reversal. But the fact that we actually broke that support level and we closed at the lows of the day. So we closed at the lows of the day and there's no support around where we closed. Why did we close where we closed? You know, there's nothing in that area there that would be significant as to why we closed there. Why didn't we come back up or even drop below here in the first place? Well, I talked last week about keeping track of this day right here, okay? Because obviously buyers stepped in right down here and caused that first reversal. It gapped down, buyers stepped in, and then throughout the day, more buyers were coming in and they kept pushing things higher. It didn't go straight up in one move. It would have gone straight up all the way up here in one move, then all the buyers would have been coming in at the same time. They were all coming in the morning, but it did have that sharp jump probably right up to here in that first 15 minutes of the market day. And then after that, it was pretty steady as it kept rising. So buyers kept coming in throughout the rest of the day. So what I talked about last week is we were hovering around this area. But I said if we do pull back and get back into that candle, that what's going to happen is the people that got in up here are now going to be underwater. They saw a profit, it started to move up, and then now they're at a loss. Now with this selling yesterday, it started to trigger more selling. If you wondered why we really dropped yesterday, it was because all these people that were late in the day buying are now at a loss. They weren't a profit, now they're a loss. They're either trying to make the damage not as bad. I wouldn't characterize them as panicky because they're not, severely underwater yet. But they're going to be a little disappointed that they were seeing a gain. They thought they had timed this thing, and now they're taking losses. But they're adding to that selling pressure. They're selling because now their stop losses are getting triggered, and that's going to continue, especially as you get down to the lower end right here. Remember, these were the really strong buyers that came in, convinced that they were very convinced that this was the bottom. And if we start getting down to these lows, that is going to trigger selling that'll probably take us lower. I just don't see, as more and more of these people are taking losses, that they're not cutting out. Now the opposite. Now again, this is why we can't know exactly what the market's going to do. Maybe they double down. Maybe they're even more confident that this is the low, and it is going to hold right here somewhere, or maybe give you a higher low. That's one thing I was wondering about. Not necessarily worried about, wondering about when we were rallying back up earlier, was that that exact thing. Are these buyers just so confident that this is the bottom that they're buying again right here? And maybe that does push things up. And if that's the case, maybe that's true. Maybe we start seeing all these stocks start to reverse and start moving higher. Now, part of the problem I have, though, with that belief comes from looking at a lot of charts over the last week, a lot of charts, particularly the last couple of days. There are a lot of individual charts that have moved below that bullish reversal day of that Wednesday bullish reversal day. For instance, and the date of that was February 24th. So if we look at, for example, I believe Microsoft was one of them. Oh, well, yeah, the intraday low today on Microsoft dipped below there. Now it did come back up, has come back up again, but it dipped below there. I don't want to try to now remember. I didn't have a list of those to give you examples. I should have, but there's a lot of stocks though that are trading below that reversal day. So it leads me to believe that's not going to hold up. And a lot of them were leadership type stocks like Microsoft that were breaking below those lows. So it makes me feel like, well, boy, if the leadership stocks are breaking below those lows, how the index is going to hold those lows? I just don't see it. So anyway, that's what we're going to be watching this week. Now, there's still the possibility, though. I mean, that's always the tough part about ABC patterns, is that, sometimes you're in a downtrend and you get an ABC move like this, and then it drops again. You get that 3-step move. So you get the initial rally, and then it drops a little bit, and you get the next little rally, and then you resume the downtrend. Sometimes you just get a little one move rally where it rallies up a little bit and then rolls over and goes lower. So it's always hard to tell when you're looking at something like this, because I don't know if this is the correction right here and we're just going to drop to lower lows, or was that just wave A, wave B, and if we could get a little bit of a rally up here for wave C and then drop lower. So that's kind of, that's why, that's why I'm not getting overly aggressive on the bearish side right here, is just because it could be possible that we rally up, and this could be wave A, wave B, wave C, and then we take out that low on the next move down. And so, that could be why we're seeing a lot of indecision right here too, is that it's still possible that maybe that could happen. Now, since I'm assuming many of you probably aren't really looking to short the market, you're probably looking at, when you're waiting to buy, you've probably been waiting for weeks now, as we haven't had a lot of new things to buy into, as we've been waiting for the market's kind of bottom a little bit. Well, obviously, although there's that danger this could be wave A, wave B, wave C, and then you can still go lower, just getting above this high, going to a higher high, there's always that possibility that it could be bottomed out. It would give you a higher low right there if we rallied up from this point, and then that would be a higher high if it goes above that previous area of resistance, or this previous high right here, this lower high right here, because you have lower highs, lower lows. And that could be an area to at least start buying. You'd have to use stops because maybe it does reverse and come back down. You might get stopped out. But that would be, if you're looking for at least a more favorable market condition to start buying in, that would be a minimum I'd be looking for, is to just see see a higher low right here, followed by a higher high right here. And it could just be a slightly higher high. So just breaking above that area right there. That would be a zone. So if you want a number, let me give you a number here on the S&P. You can put in your notes, probably about, well, let's see what the high of that day is. I got to move down a little bit here. The high of that day was back on March the 3rd, and the high was 441 on the so get a close above 441 on the S&P. That would be probably a little bit stronger signal on the chart that you could start buying. Other than that, wait, because if we have further to drop, don't burn your cash and lose money trying to pick the bottom, or think we've fallen far enough that you're going to get in. Because I'm telling you, some of these stocks have been beaten up, and you think, oh man, they're so low right now. They can't go any lower, and guess what? They go lower. They can go a lot lower. You don't want to buy something just because it's down, especially in these conditions, because we're not even technically in a recession yet. It looks like things could be headed there, but things could get a lot worse, and we can see a lot more shaved off of the market. I mean, just put it in context here. Let's just look at a 2-year chart of the S&P. I mean, here is the run up here was the COVID bottom right down here. Look at that run up right there. And this is all that we've retraced or corrected. Stocks will tend to retrace about 50% of their moves. If this is a bigger correction going on, 50% is right around in here. There's a lot further we could drop and still be a normal correction. So to think that, stocks that have been beaten up a little bit can't go lower, yeah, they can. And that's usually what triggers that fear again, is because it's like people are saying, well, how could they go low? I don't understand this. How much further are these things going to drop? And that panic kicks in, and that, wondering if it's ever going to end. And those are feelings that you have at a bottom. And that's when you're a lot closer to bottoms, when those things start to kick in. Like I said, if people feel like they want to buy right here, and you're hearing people come on, this is a great time to buy, this is a good time to get in, and there's a lot of people saying that, you're not at a bottom. And again, if you're new to this, take this in as a learning experience, because you'll start to see that if we do have a panic sell-off, you'll start to see just the opposite. All the analysts will be coming on saying, boy, we could go a lot lower than this, and I wouldn't be buying right now, and the best thing to do is be in cash right now, and just that would be the tone. And I'm not saying everyone would be that way. There's always going to be people that say to buy in. They say to buy in all the way down the downtrend. People say to buy in right here, buy in right here, buy in right here. They'll say to buy in down here. There's always going to be people that are going to say to buy. But when I'm talking about collectively as a group, where you're seeing a lot of people coming on and saying, man, I don't know if we want to buy right here. We could still drop a little bit further, or a lot further. Who knows how far we're going to drop. That's when you know that you're at least close to a bottom from a psychological standpoint. And then you want to just really watch the trend. You see the trend start changing. You start to see higher highs, higher lows. That's when you want to be jumping in. But you can tell that we're not quite there yet, right? We haven't seen kind of that extreme yet, and that's that makes me so cautious here. But then again, as traders, that's the tough part about doing this class. Is I'm a trader, so I'm just not. I don't have the mindset of an investor where I'm just looking to grab something and hold on and forget about it for 2 years. Typically, I'm doing these classes for traders because people aren't usually willing to sit down for an hour to learn unless they're wanting to be more active. If they're just looking to plug their money somewhere, well, the software can do that. It'll put you into stocks that are outperforming the market, and you just put your money in there and then just put a stop loss in somewhere, a trailing stop, and then forget about it. But as a trader, we made money on this in the portfolio on this rally right here. We made some money on this reversal right through here. So you can make money on some of these bounces, and if we get a bounce here, we'll see. You might see me jumping in and buying a few things, and I'll manage them. I'll have stops on them. And but again, as far as wanting to get it all in and then be really patient, not have tight stops, but have a little bit wider stops, I want to see those market conditions improve and look a lot more bullish. I'd like to see the sentiment match that up as well, get that panic sell off, and then get that reversal. So again, just to kind of recap that real quick, we want to pay attention to this February 24th reversal low right here. And really, if we were to close or get down to the lows of today, whether that happens today or happens tomorrow, I think we're going to be heading to break through that. Now, it's hard to predict the day-to-day movements of the market, because you could pause sideways for 3 days before selling off again. You could have a little bit of a rally day before selling off again. So to be able to say that immediately we're going to drop below that low is impossible to know. You just can't know you can't always predict that. But ultimately, we should drop below this low, especially if we close near the lows of today. When it tried to rally that far today, if we were to close at the lows of the day today, that'd be extremely bearish. And I would assume that we're going to take out that low. Where would I start to become a little bit more bullish? Well, there's a couple of areas. Obviously, I mentioned this one right here because that would give you, if we rallied up from here, higher high, higher low, and then higher high. You could even go back. We talked about how significant this area was. You had that support from here, and an intraday low right there that bounced off of that, and then the intraday high today. So if we got back above there, and closed above there, that would be more likely that we're going to get to this high, because that would tell me that these buyers are probably doubling down. They're getting back in, and they're confident buyers. And if that's the case, I want to kind of follow what they're doing, at least in the near term, to see if they can rally the market back up a little bit. Now, another thing I'm keeping a close eye on, though, too, is that the Dow looks pretty much the same as the S&P, but the NASDAQ, we almost dropped below that low at the lows today. So it is much deeper with the close yesterday. It was much deeper into that candle, and that's why I was saying that there was a lot of those NASDAQ stocks that were trading below that February 24th reversal day. I just, it's hard for me to see a lot of leadership stocks that are breaking below there or close to breaking below there, and then assume that the indexes aren't going to follow that, aren't going to end up, moving below that. So it may be that we don't want to just focus on the S&P, because it might not be the S&P that breaks that level first. And I would assume it's going to be the NASDAQ first, just because of how it's behaved over the last couple of days. A lot of the NASDAQ stocks have been beaten up or sold off even more on this drop than some of the other areas, sectors, but also the Russell. Now, the Russell isn't as close to that, and the Russell is actually holding up a lot better today, a little bit of a bullish kind of inside day today, if that can hold. But it isn't as close to that low as the Nasdaq. So I would assume that the Nasdaq would be the first one to kind of break that if it's going to be broken. But that's what we want to watch this week and we'll be able to update this on Thursday and see what's going on and see if there's maybe some trades that we'll be looking to get into that day based on what we see. The bond market has been all over the place. Now, again, the assumption is that the bonds are still trending down. We've got lower highs and lower lows through here. Even despite this little rally we had, it's still giving us a lower high. I mentioned last week this looked like a little bit of a bearish ABC pattern. We had this big drop right here. Now it did snap back, but now it's back to going down again, and so it's still giving you a lower high. I think if it could get above this high right here, you could look at a potential reversal at that point. Maybe you have a potential reversal in bonds, but until I see that, I'm assuming that we're still trending down. This is just a correction within the downtrend. And I would assume that, and now like I said, there's been a lot of volatility. You had this big move down, then a big move up, then a big move down. You don't see that type of volatility in the bond market very often. And so that indecision is actually a little bit bearish. Remember, when there's really a lot of back and forth volatility, that tends to be more bearish when you see that. That's not because it's showing a lack of conviction. And that typically happens in bearish conditions. In bullish conditions, what really gives you confidence in bullish trends is when there's very little volatility. The sell-off days are really small sell-off days, and the up days they're not big up days. If you see 500-point rallies in the Dow or 1,000-point rallies in the Dow, 800-point drops in the Dow, that is usually negative. When you have a nice steady uptrend, what you like to see is a 100 or 200-point rally in the Dow, but you see it over consecutive days. Or even just a 50-point move in the Dow, but it's happening over, consecutive days. It just kind of keeps inching up and up and up. That's when you know you're in a pretty bullish condition. When you see that type of behavior in the market. So you see that type of consistency in the rally where it's not big rally days, but it's consistent day after day. It's just kind of working its way up. Now, gold, this is where we get into the charts that are really worrying me a little bit. Gold is finally broken down. Obviously, it's been overbought for a while, but I told you, like I said, these commodities can stay extremely overbought for a while. We've seen that. You'd think that this thing was extremely overbought, really right in here, and it still keeps going higher. Now, we're clearly in an uptrend in gold, but we talked about that a little while back. When we finally broke out of this area right here, I said there's a good chance that gold is going higher now, but I also pointed out that I just seem to have bad luck trading commodities, and so I wasn't going to be trading gold. But for those of you that were looking for a gold trade, hopefully you got in. You made some money on that move, because that was kind of the strong signal that the trend was now up. Was when we broke to that new high right there, and you can see it a little bit in the longer term chart. Let's back out to a 2-year chart. And we were stuck in this range, this sideways range for so long, and then, we broke out of this high. It's pretty significant. Now we've broken above this high, and now we're really in a nice little uptrend there. But the gold trade is usually a defensive trade. It's usually people that are concerned with economic conditions, concerned with inflation. They go into gold, and even though there were inflationary concerns for a while, there's been inflationary concerns for a while. We hadn't seen that moving into gold. Now you combine that with the economic conditions maybe deteriorating a little bit, and it makes a lot more sense. And there's probably further gold could rally because I think we're just starting. Seeing a possible slowdown in in the economy, especially if we're going to get a rate hike next week. We already know that. And we'll start to see what the impact of that is. But what really has me concerned is the oil move today, and oil prices going really high. Oil, you can see right here, big parabolic move. I talked about how you don't want to be chasing oil right here. I wouldn't be buying into that right now. But it could stay extreme. It could. If you're already in it, go ahead and stay in it. I actually sold out of my oil stocks yesterday. And I have a tendency sometimes when I'm not understanding if I don't feel like I understand what's going on, I like to go to the sidelines, and because it allows me to think a little bit clearer. If you have a lot of trades, if you own a lot of stocks, you're inclined to be bullish. You're inclined to look at the market from a bullish standpoint. Why? Well, because if the market doesn't go up, your stocks don't go up, and that means pain. And that means if I believe the market is going to drop and I'm still owning these stocks, that's going to be painful to take those losses. And so there's a tendency to create a bias there where you're looking at reasons why the market's going to keep going higher instead of looking for reasons why it might start going down. And if I get a little bit confused with what I'm analyzing, I like to just get out, because then I know what I'm analyzing is not biased in any way. I don't have any skin in the game. So for me to try to purely look at the chart and analyze it the best I can, I'm going to trust that analysis a lot more, that I'm not looking at it strictly from a bullish point of view or a bearish point of view. I do that periodically, but usually it's when you get a confusing day like today where it's like, I didn't really understand the rally off of those lows. And sometimes I'll get out and reevaluate things. But if you're in oil trades, stay in them until you get a major reversal. But there still could be more upside in oil. In fact, I just don't see how demand for oil. Well, what's going to create the demand drop for oil is going to be a recession, and that's what we're worried about right now. Is oil prices are getting so high, it is starting to affect everybody. I go to Costco for my gas. So many of you probably do that. They typically have the lowest prices, and the line is well. Finally, I just said it's not even worth it sitting in that line. I'll pay the extra. I'll pay the extra $5 or $10 going somewhere else, so I don't have to wait an hour to fill up my car. But I know, like my kids, they're complaining about gas prices, and I had one of my sons that loves to go on hiking trips and things like that, canceled a trip because he's just like, I can't justify paying that much in gas for this quick trip he was going to make over the weekend. So those are decisions that people are starting to make now. Do you start thinking about where you're driving to? Do you go to that store that's 10 miles away, or do you just stick to one that's close by because you don't want to be filling up your tank an extra time during the week? This is going to have an effect on the economy, and then one of the things that's bothered me a little bit is you saw these rallies in oil and gold. The dollar's also been rallying and gone parabolic. Now, typically, as I keep pointing out, there's an inverse relationship. Now, they can move in the same direction, but they don't usually move in the same direction for very long. And in this case, when you have commodity prices going higher, particularly oil, and the dollar going higher, it almost always ends in a recession. You almost always get a recession out of it. It's one of the signals of a potential recession is when you start to see that taking place. And like I said, it can be temporary where you see it moving in the same direction. But now we've been moving in the same direction for a while, and they're going parabolic in the same direction. That's not a good sign. And so now this is where you can get into the argument. why I love being a trend trader, because it can drive yourself mad trying to outthink everybody else on what you think will take place. But it could mean that if it does kind of force the economy to slow down, it might mean less rate hikes we need to get to slow it down, because typically the rate hikes are what slows down the economy. The flip side of that is you can get a condition that we really want to avoid, which is what's called stagflation, which is you get a slowing economy, but inflation remains high. This is why I never want to be a Fed chairman, because to kind of thread the needle on all this stuff is almost impossible at times. I learned this in one of my economics classes in college, where we had to make these types of decisions in a computer simulator, and I was amazed at some of these little changes. If you change the interest rate a little bit, how it could have a big impact on what the economy did down the road, and you don't get it immediately. So it's like trying to steer where you're turning the steering wheel, but the vehicle is not going to turn for 500 feet or let's say a quarter of a mile or something like that down the road. Well, imagine having to steer the car a quarter, trying to predict a quarter mile down the road how much you're going to have to steer, and then recognize you can't really do anything if you make a mistake. It's either going to be you're going to run off the road or not. Think of how likely you are to make the correct steering decisions that far back, and it's almost impossible, right? To be able to perfectly steer that car that soon, and that's kind of what the Fed chairman has to do, is to try to manage that, and then manage everything else that's going on too with all these things that are out of control. And then on top of that, you have this war that's creating the additional pressures, particularly on oil. This is a wild time, I'm telling you. But we need to keep an eye on that, because, like I said, one of these is going to have to start to break and start moving in the opposite direction. If they continue to move in the same direction, it's going to be bearish for the market. You're going to see the market more likely to sell off. So when I see that, I see it still continuing that way. And that's why, again, the news today was going to be, I don't see how it doesn't cause oil to go even higher. And I still can't find reasons why the dollar will go lower. I mean, it is, people around the world right now want to own dollars. Their currencies are, particularly in Russia and Ukraine, are collapsing. I don't see how that's going to break just yet. So that's why it's very hard for me to be overly bullish right now, or think that we're at a bottom yet. Because we still haven't had that panic sell-off yet. We still have that market sentiment too high. Now the VIX has been elevated. Let's look at a longer-term chart of the VIX here, because again, you're seeing that we were trending down, and now you're starting to see it trend up now, higher lows on the VIX. But you can see that we can still move up higher. We can still see a little bit more fear. And I know the VIXY is not the best chart for the VIX, but it's the one that we can look at here on Traders Pro. But as long as we're elevated like this, it's going to be bearish for the market. And now sometimes you can say, well, what if you get a big spike, a big extreme? But that's not what happened today. We didn't get that big, gap up here and then reverse, where it was really, kind of like right here, where you had that was what happened on that February 24th. You opened lower, you had that big fear spike, and then it reduced, it came back down. We're just kind of, sitting inside the candle from yesterday. And it's just showing a little bit of indecision in the volatility today. It could go either way right here. All right. Chip stocks. Again, this is another one to keep an eye on. Again, look how they opened. They traded below those. Oh, that was another sector, was A&D, and those chip stocks had traded below. There's that February 24th reversal day. All the chip stocks had traded below there. Now remember, why do we look at the chip stocks? They tend to be a leading indicator for the NASDAQ 100. So if they're leading the way and they've broken below that low, I would assume that the NASDAQ 100 would need to break below that low as well and follow suit. Now, they are holding up a little bit better today overall, so far at least. And again, that could mean that maybe you get a little bit of a bounce here. Who knows? But I think we should eventually, within the next few days, see the NASDAQ 100 break below that February 24th low. And let's look at Bitcoin here real quick. Bitcoin, this is one that's kind of a little bit confusing to me, because right in here it looked like we might see Bitcoin start to rally. Those stories, I think I mentioned this in the update last week, that there was a lot of people in those affected countries with their collapsing currencies that were going into cryptocurrencies. I thought that might be more bullish for Bitcoin, but it's reversed and come back down. It's still acting like a downtrend. This is going to be a key low right here because it tried to rally right here, but it still gave you a lower high. Doesn't give you a lower low. We'll see if it keeps acting like a downtrend there. We should probably have a little more clarity on that by Thursday's update. All right, so now another thing I focus on too, if you want to, another stronger indicator to buy in, but this would probably happen if we can get back above those other levels I talked about earlier, is to watch for watch for the buy sell ratios, and this one here is the buy sell ratios of the whole market. If that gets above 1, we backed off now. We were up at 0.83 last week. With the selling, we're back down to 0.4, so we need that to get to 1. 1 is right here. You want to kind of see that visually. All that saying is that you're starting to get the same amount. You have the same amount of buys as you have sells, but that's right now you have more sales out there than buys. And this is again for all stocks out there. This is the whole market right here. If you can get above 1, then the process that I talk about all the time, where you're looking for the top sectors. So if you get above 1 on there, then that's when this works a little bit better. When you go to the sector tab, you look at the top sectors, and you look for stocks that have a 98 strength rank, going from hold to buy, and you like the chart as well or whatever. That's when that process works a lot better, is when you're already seeing that the holds or the buys are outpacing the holds. You could also go into your index tab right here and look at how that ratio is shifting from the different indexes. Here's the Russell 2000. You can see you have twice as many sells right now than buys. Not the most healthy environment to be, buying a bunch of stocks when you have more buys than sells, and especially if you're trending in that direction. Meaning, if you go from this position right here, and more of these sells go to buy or go to holds, and more of those holds go to buy, and then that is starting to, when you get to a 1 over a 1.0 on here, then that means that you have more buys than sells. Now, this is also a sign of a weak market, is when the utilities, look at this, you have 11 that are in the buys versus 1 sell. That's a double-digit ratio there. Remember, utilities are the safety play. you're not going to see a high growth natural gas utility company. No, these big investors, these big institutional traders go into utility stocks because they have high dividends and they don't move very much. So they don't go up big or down big. They kind of, people are going to still they're still going to pay their gas bill. I guess they could grow, some companies could grow based on population growth, more people moving into an area or whatever. But they're just not exciting. They're definitely not something you'd be in a strong bull market, because the amount you're making from that dividend is not nearly enough that you can make in those strong or those high growth stocks that could double in value over the next 6 months, or something like that. So that's what you would expect to see in this type of market condition, is utilities leading the way. And so keep that in mind when you're looking at these sector lists here, and you're seeing utilities at the top. We already know why oil is at the top, but what you would want to see in a really strong bull market, you'd want to see computer and technology at the top, business services at the top, retail. These would all be the ones that would be right at the top when you know that there's a high risk tolerance in the market. The fact that they're all the way down here is again what you would expect in these type of market conditions. Question: where's the disconnect between huge demand for semiconductors and the fall of the SMH? Well, I don't know. It could. I think the fear with, remember, traders are forward looking. I think the fear there is that those supply issues are going to resolve themselves as the economy is going into recession. So what you're going to have is you're finally going to have all these chips now available, and all these companies not wanting them anymore because their stocks are going down, the economy is slowing down. That's where I think there's that disconnect. The question is, why are chip stocks dropping even though there's supply issues? There's demand for chips right now. Companies need chips. They've been needing chips for a while. I think that's why you're seeing that. But again, I'm not the best person to come to if you want to get reasons for why things are happening. I have my opinion sometimes. I'm always willing to share my opinion. But I learned long ago that all I really want to care about mostly is what the chart is telling me. If the chart is trending down, I don't need to know why, because obviously those big institutional traders, they have their reasons why, and they're the ones that really matter, because they're the ones that are moving the markets. So, if you know someone at Goldman Sachs, that'd be a great question for them, because they probably have a better answer than I could give you. But that's just knowing how markets look at things, how traders look at things. They're always looking out in the future. That would be one thing that I could see as a reason why chip stocks are falling, is that the economy is slowing down, and there could be this oversupply of chips, because there are a lot of people talking about the chip shortage being nearly done. I mean, they've been producing as fast as they can for a while now, and that could be going into a slowing economy. That could be a little bit disastrous for chip stocks. So anyway, that'd be my 2 cents worth on that topic. All right. I'd go further, but I don't have anything in the portfolio right now. I'm all in cash. That could change by Thursday. Now, I did want to quickly go over something you could consider. I'd like to go over a stock or two. I didn't want to go into the sector, so I went into the muscle stocks here, and I went into the new buy section. Now, remember, you still want to factor in strength ranks. So typically, I'm probably going to look at the ones that are in the 90 range. I don't want to go below that. Are there any that look interesting to me? This ASLE 94 strength rank. Again, it's had a big drop right here. It's kind of been, what I'm looking for right here is this a little bit, is this a consolidation? Is it starting to move up to the right side of that bowl? I don't know for sure yet, but this is one you could kind of keep an eye on. Maybe you get a little bit more confirmation. Maybe it breaks out of this little sideways range. It's already at a buy signal. Let's see if it can break out of that sideways range. I'll reiterate, though, I don't like getting into a lot of things in this type of market condition. That's why I'm not doing it, but I get it. I know that you're like, I know some of you are like, if I'm going to sit through an hour of listening to Jerry, I want at least a pick. Give me a pick at least. So I want to make sure that I can accommodate that as much as possible. This EXR, extra space storage, 93 strength rank, kind of the same thing. You know, it has lower high, lower low through here, but it has a little bit of an impulsive move down, impulsive move up. You know, if it pulls back a little bit and then gives you a higher low, it could also look like an inverse head and shoulders pattern. You'd want it to go back to a buy signal anyway, or if it can even break out above here and give you a higher high, that'd be a good signal as well. And let's do one more. This OTTR 90 strength rank. Kind of the same thing where you're this big drop, and then it looks like you might be starting to bottom out, maybe start moving up the right side of the bowl. All right. Hopefully on Thursday, I've been kind of waiting to jump in and do some things. Hopefully on that day we have some that we can at least get into. Because like I said, if the markets can look like either we sell off in the next day or two and get real close to getting that bottom in place where we can start buying, or even if it's a temporary rally that we end up with, we could jump into some things. We might have some things on Thursday we can jump into if that were to take place. Let me take a real quick look at how that S&P chart candle looks. It's rebounded a little bit. It's rallying back up a little bit here. Like I said, we'll see how things close. If it closes like this, that would just be complete indecision. It could really go either way tomorrow. If it closes at the lows of the day, that'd be very bearish. If it closes at the highs of the day, it means maybe we get a little bit of a bounce for the next day or two. Maybe it tries to rally a little bit more. All right. Have a great week, everyone. We'll see you on Thursday for the stock-specific class. Bye, everyone.